Hello, this is Dean Malone with Compass FX. Hope you're doing well today and you're getting some good trades. I want to take a brief moment and look at the pound dollar because from a technical and fundamental viewpoint, I think that the pound dollar is setting up for a potential fall. And so I want to give you the reasons on the technical and on the fundamental points of view that would drive the pound down and where could it potentially go to. So let's just take a look. In a previous video, I talked about trading with the average daily range, and I mentioned that if the market stays within the average daily range of about 50% of its normal move for 1 to 2 days, we look for a break. Well, if you notice here on the pound dollar yesterday, the pound moved about 58 pips or so and then moved back in. Today, from this low point to the high today, which was near the October 31st high of 61.64, I told folks in my trading room I'm looking for a bounce, and sure enough the market bounced off of this. But again, this was only a move of about 58, 59 pips. Well, the average daily range over the last 5 days has been right about 100 pips. Today showing 97 pips. So the market is trading about 50% of its average daily range. We've done it for 2 days now. Usually after 2 days of being in a fairly tight range, we look for a break. Now, if you take a bird's eye view of the marketplace and we step out and we look at the pound dollar on a 4-hour chart, you can see that since April the 16th, the pound dollar has moved up steadily, almost up to 350 pips. Well, this move of 350 pips is a pretty strong move with no retracement. Taking a look at our fib extensions from a swing high to a swing low, you can see that we've moved about a 200% move on this. And if the market were to push up higher, then we have 162 coming right in at the 233. Even if we go and take a look at the swing high starting back at the 1st of April here, you can see that a 1618 extension would again put us right about that 162 level. But I'm not sure if the market's going to do that. It might, but take a look at sentiment here. We can see the volatility bands are tightening down. That is a sign of consolidation. There's a sign of a potential turn as well. Note the highs here. This peak, another peak, which is higher, and then a lower peak. This is showing a potential head and shoulders pattern. And if you'll note that the market baseline, the yellow line, is above the 68. Typically when the yellow line, the market baseline, gets above the 68, we're starting to look for potential reversal. Now there is the possibility that the market baseline could continue going up. There's a possibility that we could see this potentially push up and pin high towards 162 based on the fib extensions here that we talked about, getting up here at the 233 level. But at that point, based upon what sentiment is showing me, I'm expecting a fall back down. So we're going to be watching the green and yellow for a potential fall and a break of this neckline here. If that happens, I'm expecting a break to the downside. Again, 2 days where the average daily range has tightened down and has moved sideways, that giving me the idea that we are to look for a break, and then the extreme move to the upside with no major retracements here, again a potential move to the downside. And then when you take a look at sentiment and the volatility bands tightening down and the green, yellow, and red to the high, all this is telling me the potential turn to the downside from a technical point of view. Now, taking a look at the fundamentals, you have to consider what David Miles spoke about today. David Miles is a Monetary Policy Committee member of the Bank of England. And he made a pretty wide statement saying that the growth in the UK is pretty weak, looking at domestic inflation. And considering the underlying growth may be marginally positive, but it's well below the long-term trend rate. And he expects that there's a potential that inflation may slow below 2% in the next 18 months. And tomorrow we'll have the GDP number coming out, and he said it wouldn't be surprising to him that even though expectations are for the GDP to improve from a negative 0.3 to a 0.1, he said it wouldn't be a surprise if it actually came out to be a negative number. So having dovish statements from a Bank of England committee member seeing things technically that says we're kind of in an overbought condition, both in price action and seeing that sentiment is in an overbought condition based upon what the TDI is showing us, gives me reason to believe that we're going to see the pound dollar fall over. And what we're going to be looking for now on the intraday charts is where we're going to. Now, I had mentioned to folks in my live active trade room to look for a potential short right around 61.63 to 61.64 area, because that's the area of the last major high going back to October 31st of 2011. And the market pinned high today right to that level, and I got triggered at 61.63 in my live active trade room, and we made a few pips to the downside as it moved down right to about 61.30, and there's where it's been bouncing around today. Now, there are some bids in the market trying to hold this up at 61.20, trying to push it back up to possibly the 62 level. But my thinking is this: I'm thinking we're range bound right here. We're seeing negative sentiment here. We're seeing the market kind of draw down like so. There's the potential that the market may just set steady until that GDP number comes out in the European session tonight. Now, be mindful that the Australian banks and the New Zealand banks are closed for bank holiday. So not expecting much in the Asian session, but going into the European session tonight, if that GDP number comes out worse than expected, there's a possible move down on the pound dollar. Now, if that isn't the driving factor, what might be the driving factor is tomorrow's FOMC meeting, and we'll have to find out what Fed Chairman Ben Bernanke will be talking about regarding the U.S. economy, the U.S. dollar, and how that might fare with our trading partners. Again, many folks around the world are using the dollar as a carry trade. What they're looking to do is the dollar has such a low interest rate at 0.25% that when the market seems well and there's a risk on sentiment in the marketplace, then traders and institutions will sell the dollar and buy riskier assets like the Aussie dollar, the Kiwi, the pound, the euro, and other currencies that are paying a higher interest rate for holding the currency. So we'll have to look at these common factors. My thought is this: look for the pound if we have a negative sentiment in the marketplace and the market does follow, or price does follow negative sentiment, then I'm first looking for the market to move down to about 60.80. That would be the first level. We have bids in the market built up between 60.60 and 60.80 area. If we get through that, then look for the market to drop down to about the 60.50 level. And what we'll do is we'll simply take our fibs and we will run them from swing low to swing high, and then we'll look intraday for where the move can potentially go to. So again, I'm looking for the market to move down to the 60.80 area, which is this low point here. Then I'm looking for the market to move down to the 60.50 level, then on down to about 60.35, eventually getting down to about 60.20. Between 60.20 and 160, a number of bids are sitting down there to potentially buy the market back up. So between 60.50 to 60.20, we should see a steady drop down. But when we get to about that 60.20 or 60.10 level, look for some support in the marketplace to possibly push it back up. Well, folks, this is Dean Malone with Compass FX. I hope some of this information will help you forthcoming in trading the pound dollar. Look for the pound to potentially roll down 60.80, 60.50, then down to 60.20, but don't be surprised that if the GDP comes in line, there might be a favorable move on the pound back up to 61.65. It may even pin up towards 162, where a number of offers, corporate and institutional offers, are sitting at 162 level to drive the pound back down. Well, folks, it's Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.